So, Mr. Shane, I would like to understand from you that there has been a lot of investment startup where sustainability or the profitability is not really part of the near future. But yes, the pandemic and certain economic stage situation has put back the focus on the sustainability of any startup or the growing company. Right? So, do you think there are few sectors who can achieve early sustainability, or whether do you follow a strategy that it more depends on the business plan and the go-to-market strategy of any startup? Right? So, because a lot of startups, they have a less understanding that how soon their startup should be sustainable and when they should be able to generate profit. So, if you can just put some light on that, that will be helpful. Yeah. You're on mute, sir.
Sorry, I was on mute. Thank you for the question, and thank you, Resurgent, and thank you, my dear fellow members of the panel, for this opportunity to be talking to you, all of you, and the other participants. See, investing momentum in India is primarily driven by the digital infrastructure development, like said, cheap data access, UPI, eKYC, Aadhaar, which primarily drives most of the fintech, etc. So now, if you read the latest reports, as I see, this digital economy accelerators are a key to the entire venture capital environment, because obviously there are startups and there's a momentum, which is, the tailwinds are all of the disruption in China. Then, you can't invest in Chinese startups and stuff like that. So there is a lot of interest which comes into in terms of the startup ecosystem that we develop in India. Now, but the investing in startup is actually, or the ecosystem of the VC is always troubled by the fact that by the very name venture capital, it says that you have to enter into a venture, but then you don't see. But then most of the time, people in the tech space, and mostly because every tech space there could be an idea, we used to ask the difficult questions which we thought was difficult. Do you have a product? Do you have a service? Do you have a thought or a solution to this problem or a service? Then you could have a venture. But I think now it's much more pivoted towards matured way of doing VC investing, where you really need to see whether there is a light at the end of the tunnel. I mean, I primarily focus, I'm not a typical VC style of investing. It's a mix of VC and PE style of investing, where you really require to look at the operational sustainability of the model, of the business model. An idea, when you fund, it's a seed fund, so it doesn't come to the VC or the acceleration stage. So fundamentally, I think, so those kind of challenges you see not in a matured investment that you do at a Series A or Series B, but it could more be likened to when you start early stage. We also do early stage, but more importantly, we see whether there is a light at the end of the tunnel. That's what I keep telling the entrepreneurs, whether they are tech, whether they are fintech, the SaaS, because there could be an idea. I mean, look at fintech. I mean, I've been looking at some innumerable number of fintechs. I mean, there are fintechs which have lost money during COVID, 10% of NPAs, So it's all about how you pivot the model, and actually how much of digital infrastructure you use and how much of brick and mortar do you really use, and you call yourself. So, we have these kind of parameters, and also being an impact fund, we also look at responsibility metrics. So we developed a very specific series of investment metrics, which we need to have these companies meet, especially when I talk about, light at the end of the tunnel. I mean, I believe in sustainable operating cash flow model, period. Even if you're in deep tech, you let me know. For example, I invested in a AI and ML company, and I understand that's more value driven and it takes a little bit of time for it to really. But yeah, except for those exceptions in deep tech, you basically look at all the other SaaS related companies, fintech companies, all should literally have some kind of a plan. And if you're convinced by the entrepreneur and by the technology available and the variables around it that there is light at the end of the tunnel, an operational sustainable model, we normally put a lot of time. And unlike, we take a little bit of incremental time for investing. So like we invested 7-8 investments till now. But yeah, in the last 2 years. And we are happy in the current situation, because then there is a liquid or dry powder less. We have got our companies obviously due to COVID impacted, but sustained and moved over. So what was the point which really helped us to do it was the fact that we looked for this operational sustainable cash flow models, which I think is one of the key thesis that we work with, along with the impact model that we have. So that applies to technology sectors too. So it's a way of how you look at it, So we said you should be investing without fear and greed, and you should be, because then you don't shortchange an investor or an industry. You need to have a perspective and develop and operate within an operationally sustainable cash flow model. If you don't see that, go ahead. And then the third point is that, nothing given free is value. So obviously, if I'll subscribe, I've got X amount of subscriptions, I will hit. A lot of people come and the first task is a 10 million or 20 million as valuation from seed stage to early stage. And it doesn't make sense. So I think those types of VC investing days are over. So it's much more clear-cut view in terms of the technology, the use of technology, and more importantly, whether you can fulfill a need and a service by technology. Is it going to be a sustainable model? Do the consumption of the technology is going to be a service or for a long period of time to come? It's something which you need to really look at, because it also has a very direct impact on the ecosystem and culture of the way we work and we do things. We are all talking about now metaverse and what metaverse can do, but we all don't understand how much of impact it will have in the way we live and we think.
Yes.
Obviously, there will be blocks. It's like blockchain. We have been talking for a long period of time. How much of it are we able to use? Forget the crypto part of it, because that's got its own risks and rewards, metrics playing out for itself. So I think it will become much more interesting, and while the VC investing market will continue to dominate, and it will be towards your fintech, SaaS-based and healthcare, health tech-based kind of investments going forward, it will also look for very sustainable operational model. And which brings to the point that I think Alok mentioned, and that was about the guy needs to have a 10-year vision. And you have to figure that out. So it's point 1 is the entrepreneur, point 2 is the entrepreneur, point 3 is the entrepreneur. Basically, if you have people taking out a tech startup and say, because a lot of people don't go for jobs now, IITians, IIMs, they say we'll do a startup, finish first one, take it up for valuation, and then it's like so it doesn't make sense unless there's no real growth. It's like real and nominal rate of growth. So that's the kind of expectation people have, and they say that I'm going to do my own startup. So VC investors like us and like all the people out here should be very clear that they'll only back now sustainable models, or you may have an idea and we'll work with you to make it sustainable. We'll try to pivot it towards that. See, that is acceptable.